We caught up, by the way, with Nielsen South Asia's Executive Director Sameer Shukla to talk about what exactly have been the trends seen in consumption, the trends seen in FMCG companies in the quarter gone by. Because do remember, FMCG companies more or less managed to either beat street estimates or just come about in line with expectations when it came to their Q4 numbers. So let's bring on board Mr. Sameer Shukla then. Hi, Sameer. Good afternoon. Thanks so much for joining in. Like I said, Q4 was quite a good quarter, but do remember the base quarter was very noisy because we had GST, we had demonetization. So how should we assess the growth witnessed by FMCG companies in the quarter ending March 2018?
We just saw in the current quarter that the earnings were good, and we hope that in the April, May, June quarter also, on a relatively lower base of last year, earnings should tend to be on a good side. So that's the projection that we have for the entire of 2018 Jan to June kind of half year. Now, when it comes to the July, August, September quarter, when last year things were coming back to normal from the shipments point of view, it would be interesting as to how is the macroeconomics and the overall consumption pull play is playing around to see whether the growth is sustained on the earnings side. So that's one part of the story. Now coming to the consumer offtake is the forte where Nielsen tracks the market closely. What we saw was in the first half of 2017 last year, when the shipments were under stress, the distributors and the wholesalers in the trade pipeline, they were still pushing products further up to the retail, and retailers were also selling to the end consumers. So the consumer offtake was not, say, slow, rather it was seeing in a sort of accelerated terms because other macroeconomics were supporting consumption growth story. Now on that base of 2017, what we are seeing in 2018 now in terms of consumer offtake is a decent growth. So it's not as high as what we saw in 2017 over 2016. But 2018 versus 17, we are seeing a growth which will be close to maybe a double digit 10-11% is the projection that we have for the full year of 2018, which in 2017 was close to 13.8%. So from 13.8%, we are looking at say maybe a 1 or 2% lower or maybe 2.5% lower from what we clocked last year in terms of consumer offtake growth.
Hi, this is Nayantara joining in from the New Delhi studio. Can you explain to me why it is that growth projection for 2018 is tempered when compared to 2017? And I ask you this because monsoons are expected to be good. It's an election year, so money is going to be pumped into the system. And even if I go by the fourth quarter earnings of the consumer stocks, they're the ones who really scripted a turnaround story.
We have to realize that inflation, the consumer price inflation, which maybe a couple of months back was in the 2% kind of range, is now hovering around 4-5%. And the projection for CPI for the full year would be in the range of 4 to 6%. That's one side of it. The second side of it is the overall economy is under a good acceleration. So the GDP growth, which was maybe in 6 to 7% range, now it's projected to be in 7 to 8% range, and will continue to be in that range in the coming quarters too. Now looking at the tailwinds of good monsoon, which is the third consecutive year this year, and monsoons are going to be positive. And as we are talking now, today is a date when it is expected that monsoon would be touching the coast of Tamil Nadu and Kerala. Now if monsoons are normal third consecutive year, which will affect on right kind of production and productivity on the agricultural side, if GDP's growth is also on a buoyant basis, the manufacturer's action will be the third component, which is probably going to be the most important one.
So, we're speaking about the positives, the triggers, etc. for consumption, but what are the key risks or challenges you foresee for this space?
So I think the biggest risk that we have is coming from the inflationary trend. So if crude goes out of proportion, which is having a direct impact both on the input costs or even the packaging side of the industry, that may be a dampener. Likewise, if we have, if because of some reason if the agricultural production goes for a beating, or if the minimum support prices are not going up in the same extent that used to be maybe a couple of years back. Because on minimum support price, what we have noticed, if you see a slightly longest trend, so maybe 4-5 years back, the minimum support price was going up in the range of say 6-7-8% annually. In the last few years, it has actually not gone up to the same extent. So with the most recent announcement from the government side, if things pan across in the right way, and if that support price also goes up, say in the 6-7% kind of range, that will ensure enough cash in the wallets for the rural consumers, and that will be a boost. If that does not happen, that may dampen the growth to some extent.
Okay, interesting insights, Mr. Shukla. Thanks so much for joining us on ET Now and helping our viewers understand what exactly were the key highlights of the quarter gone by, and of course, what can we expect in terms of 2018 and 19.